See if you can fix that. Let's see. Should be able to see me, hopefully. Just finished
Good,
the
bro.
workout. All right, let's go. We are being live streamed. All right, cool. So guys, we're going to get straight into it, right? We're going to have a look at what we was looking at yesterday. What this should do, guys, it should fill you with confidence that the education that we're delivering every single morning is based upon something. It means something. We've seen things play out. And this is what the benefits of us having our regular breakfast club is, because you can hold me accountable. All right, which doesn't really exist too extensively in our industry. So it's easy for me to be on Instagram and to put up that I made XYZ, or to put up a trade and showing that this happened and we made a billion pounds. All right, but it's not real, is it? It's just like I've cherry picked something and I pretended that this is what happened. But when we're on a session, when every single session is documented, apart from yesterday for whatever reason, yeah, is documented, and we turn around and we say, look how this market was here. We turn around and we say we don't take the bait, and then we said turn down here and we said we believe this market's going to come up here and close this imbalance. All right, this is what we discussed. Look, have a look. Today is Friday. Yesterday was Thursday, and let me put a vertical line in. A vertical line yesterday right here was Breakfast Club. And at Breakfast Club, we believe that this market, and all of these lines here were drawn from yesterday. I didn't wake up this morning and draw no additional lines. All this markup here was here from yesterday. Now, what can we see? What does this give us validation of? What does it confirm? It confirms a few things. First and foremost, it confirms the fact that we should draw our ranges in regards to our trend lines. Don't you think so? Bearing in mind, we drew this markup was drawn yesterday around about this time here where this yellow line is. Look how the market price traded within this range of these two little random yellow lines that we drew on the screen. All right, boing, boing, boing. We drew this yesterday. It had a little dance in here. Boing, boing, and we're seeing a reaction. All right, so that gives us, it confirms a reason why we should draw our ranges in the way in which we draw our ranges in. Okay, to be fair, looking at them now, could have drawn it a little bit better. The angle is slightly off, but it doesn't matter. All right. Secondly, it confirms the fact that we understand that the market doesn't like imbalances. So when we was down here, we see market structure and the market, doing a little hokey cokey. We understand that the market wants to come back and fill this imbalance, and it has filled that imbalance completely. And if you remember yesterday, I said, this is an interesting trade for me because A, it might come and close this imbalance, and B, and then turn around and decide it wants to continue coming down, because on the larger time frame, this is a potential indication. This could be a potential correction, and we may get a potential continuation coming back down in this direction. Or I said that getting involved in this for the buy is still interesting, because if this is just seen as a liquidity grab, look at this big 4-hour wick, just grabbing liquidity below here and here, nam, 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 nam. But maybe this market wants to continue running in this direction that it was going in previously, bullish. That's what I said yesterday. Yeah, those are my exact words. And if it recorded, you would have been able to rewind it and listen to those words, all right? But for whatever reason, it didn't record, okay? This one is recording. I'm seeing it flashing, and we should be good, all right? So that's what happened. And that's where we are right now. Now, what do we do? Remember, our Russian doll theory. We do not know from the bigger picture. Have a look. The bigger picture is that this market is ultimately, let's go to our 8-hour, let's go to our daily. Ultimately, this market is bullish. It's an overall bullish market. Have a look. Trading within this range, making some higher highs, higher lows, higher highs. Okay. Now, if we're trading within this range here, then there's a potential this market's going to, boom, hit its head on this top of this Russian doll, say ouch, and the market might start falling down back towards this yellow line. All right. Or the concern is, are we actually in the middle of a much bigger range, which is that bigger, thicker yellow line? That's the question. because we was trading a little bit within this little range here, you know, up and down, you know, etc. But it's part of a potentially bigger range. All right. Now, I don't have a crystal ball. If I did, I will definitely put you guys on and I'll tell you what's going on here in the markets so we can all prosper. Okay. However, what I can do is I can read and react to what the market does. Okay. So as you can see, the market pushed down. All right. Here, boom, massive push. All right. From up here with the price breaking outside of the market. The market was these two red lines. Yeah, the price broke outside of the market and it opened up a huge chasm of imbalance that we said the market will come back and close because it doesn't like imbalances. All right, at the moment it's done that. And if we want to knuckle down, we can see the market is actually, after it closed the imbalance, it started to do the hokey cokey and started to go sideways. If I drop to my 15-minute time frame straight away, give us some information. Look at that market, really tight. Really tight price action. I'm going to draw two squares. I'm going to draw one over here, two rectangles like this, okay, and I'm going to draw one just in here, which is what was happening kind of overnight. All right, overnight the market get very tight, and you know, we're watching it right now having a little bit of a break outside of that little really tight action there, okay. But either way, it's this bigger range I'm interested in. What is this market going to do? Is this market going to break outside this orange box, or is this market going to start breaking down below this orange box? I think I'd like it to break below this orange box and start doing something down here personally. I'm thinking to myself that I would like it to break down here, make an indication, make a correction, start continuing and falling down. All right. So falling down within the first range, within this little yellow impulse, okay, but on a bigger picture, breaking outside of this yellow range and pushing down to at least these equal lows over here, okay, and beyond. That's what I'd prefer the market does, but it might just say, you know what, I'm going to continue pushing bullish because I'm in the middle of a bigger range and this was just some liquidity grab. It might do, I don't know. It may do. So all I can do is read and react. And how I do that is with my little eyes and ears in the market, which I call alerts. I'm going to right click over here, add an alert with the market crossing down. I'm also going to right click up here, add an alert of the market crossing up. Okay. That's going to be my basis of what this market, you know, see what it's going to go and do out of these areas. Yes, we are having a little reaction, a little break out of this tighter range over the Asian session. That was the market was in here, just, you know, getting quite tight. I don't really want to get involved in that. I don't need to. All right. I don't really need to get involved in that little tight action. Can you see it? I dropped to my 5-minute time frame. Look, it's a bit clearer now. The market indicated, maybe made a little correction. I don't want to get involved in this. I want to wait till it breaks outside of here. All right, but at least we have seen this, and now you've seen it with your own eyes. For those of you who haven't seen it, these imbalances, first and foremost, when you see them form in very fast price action, as we stated in the other session, do not try and catch the falling knife. Don't take the bait. All right, do not take the bait. Sit and watch this and wait for some really valid breaks of structure before you try and get involved in a closure of that imbalance. Wait for something that's very valid, very clear. The market is definitely breaking structure, making indications, corrections, and continuations in the right direction. Okay, before you get involved. Okay, you know, one could have been an indication here, could have been a slight continuation here, correction here, and a stop below, you know, the swing low would have been the safest place to place your stop. Okay, here. All right, you could have turned around and be taking a very aggressive entry below this stop, below this little tiny retracement here, but I wouldn't have. Why I wouldn't have? Because this kind of looks a bit consolidation-y, all right, a bit sideways, meaning there's liquidity below this level, and we can see all these green candles, meaning there's imbalance in here. So if I was to go to my 15-minute time frame, we'd see the imbalance, and you know, I wouldn't advise to place my stop just here. When look, we can see that imbalance. At least look here, there's imbalance to here, yeah. And then we've seen that further imbalance underneath here. So like I said, the safest place would have probably been pressing your stop over here. But at least if you're trying to think about this last low, you've got to take into consideration the imbalance that's right beside it. If you did that, you probably would have been good. Probably would have just been able to stay in that trade. But that's a coulda, woulda, shoulda. But the whole point I'm making to you is don't be eager just to try and think you're going to, when you see very, very fast price action over here, you're just going to quickly jump in and it's going to spring back and close imbalance. It's not necessarily the case, all right? Let's go see why our NAS was ringing. Our NAS was ringing probably for some previous alerts that I put in the market. You see how my eyes and ears work? Well, I didn't know anything's happening with NAS until that alert rung, okay? And it alerted me to NAS. That's why every so often you need to clear all of your alarms, all right? I'll show you how to do that. You go into this little alarm section here, you go to these 3 dots and you remove all. Yeah, because then you don't want just old alerts sitting around and just making noise for no reason. All right. But have a look here. For whatever reason, this alert started going off because I must have had an alert in here. And now I need to try and work out why it was. Now, if I didn't want to work out why I've got that alert in here, in that alert, I could have written a whole spiel about what's going on. See that little pop-up that came up here? I could have, 1 second. I could have written a whole spiel in here about why I've set this alert. I didn't, because I was probably doing it quite quickly because we was trading, etc. As Ed was teaching. But let's have a look at this, all right? This is the exact same scenario, they were looking at US 30, and ultimately this market is bullish, making higher highs, higher lows, higher highs, higher lows. Now, ultimately this market is going to go make another higher high. It's going to continue doing what it has always done until it does something else. All right. So realistically, to be fair, it would have been more interesting for me to turn around and say that we got in a small buy here and we're trading it back up to these equal highs. Now, the question is that I'm asking myself now, have a look, looking at this this NAS, is what is it doing? Oh, I remember now. Is this NAS going to bang its head on the top of this blue Russian doll? Yeah. And decide it wants to start coming down and trading back down within this pink range? Yeah. Or is this NAS pushing all the way up to this yellow line over here? Well, I don't know. But what I do know is I can see that the range in which it's trading within here kind of looks like this, okay, at the moment. So there is a potential that that market is going to push up some more within that little white range, okay? But when we saw this big push down here, we was wondering whether or not the market was going to break and price was going to break outside of that range. Now, price didn't break outside of that range. It respected the range. It came back up and made a correction. But reality, this might be the impulse because it hasn't broken any structure yet. You see, it hasn't done this. Remember, when I want to get into a reversal, I want to see price do something else, break outside of the range and start wearing baggy jeans when everyone was wearing straight jeans. At the moment, it's not done that. It's still doing what it has always done, which is make higher highs, higher lows, higher highs, higher lows, higher highs within that white range. Do you understand? So therefore, it's like, how can I now come to the conclusion that that market is going to turn around or anything like that when it hasn't done anything different? When it's ultimately doing the exact same thing that it's been doing, okay? So at the moment, looking at this market, oops, what have I done? I'll press spacebar. Yeah, I'm a notorious spacebar hitter by accident. So let's do that. Let's go back. My son made me a Valentine's Day card. You can't see it. The drawings are pathetic, but sweet anyway. But the drawings are all over the place. I tell my son as well, like if he brings me fraff, if the picture is a total fraff, I'll be like, listen, you better come better with that picture, yeah? This one was fraff. This one was definitely a last minute job, yeah? Well, he wrote me a nice note in between. That's my 4-year-old, all right? So have a look at this market. Like I said to you, we can see this market making higher highs, higher lows, higher highs, higher lows. Let's have a look at some of these things. Some areas that we haven't spoke on for a little while. Now, can you recall us doing a lot of work in regards to these impulses? So have a look. If we're looking at this market here, I think we can clearly see, if we was drawing our lines, I'm just going to start from here, it looked like this, from here to up here, from here We haven't finished this at the moment, okay? We haven't finished this push at the moment, but we can see these impulses. Let me start from lower down. Start from lower down. All right, we can see these impulses. 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 All right. And one thing we was identifying something about the 50%. Have a look. That 50% area. Can you see that green line? Yeah, what a coincidence that the market impulsed up here and then it came down and watch. Boing. Hit our green line, 50%. Interesting. Might be a one-off. Might be a one-off. All right. Let's try again. Close. Close. I don't know how well I've drawn it. Close. Near to this 50% area. Okay. Now, why am I, talking about? I'm just saying that it's another bit of confluence that we can see that when the market is trending, within a direction, yeah, that, we look at that 50% retracement area, which sometimes it goes past that, goes into our 618, goes into our golden zone, but we look at it as an area of interest of where the market might decide to turn around. Have a look again, that little impulse. Have a look at that little 50% area over here, where the market came down and touched that 50% area and pushed up. Yeah. So this always becomes a point of interest when we see the market come down here, especially if we start seeing breaks of structure, indication, correction, continuation from around this 50%. Now, sometimes we do get deeper. We get all the way into this 618, 786. And for the people that want to see my settings, here's my settings. You can take a screenshot. All right. Here's my settings. You can take a screenshot. Which quite simply just has a few different settings on the Fibonacci. Now, different people have this Fibonacci set up differently, but I simply have the 100 point, 0 point. I have the 50%. Then I've put in the 618 and 786 just for extra sauce because it's a golden zone, we like to call it. All right, 5, 4, 3, 2, 1. That's gone. All right. Now I use my Fibonacci's sparingly. I'm not somebody who every single thing is a Fibonacci retracement and I'm looking for here for this level and that level. That's not my strategy. All right, but I do use it occasionally to measure out, find 50% to see if it's going to see where golden zones are, etc. Now, right now, the question I'm asking myself is this market going to break above here, or is it going to turn around right now, all right, and start coming down and back down to these equal lows? Personally, I'm feeling that the market might continue pushing bullish. Okay, however, I'm not going to marry that idea. I'm going to watch. I'm going to read and react to what the market does. But at the moment, this market we can see is pushing just up here. I'm going to very simply, I can see an imbalance. I can see a breaker structure M. For those of you who can remember our breaker structure M's. All right, when we're looking at that, have a look at the M up here, M. And what we used to do, which you can use your Fibonacci for and understand the golden zone, is from here to here. There's a golden zone in here between these two orange lines. And maybe the market might tap into there and start having a reaction. Maybe. Okay. But I actually believe, looking at the larger market structure, this market might decide to continue pushing up. Either way, I do not know what the market wants to do. So what I can do is I can read and react to what it does. Okay. So are we going to push into that little orange area there? And am I going to see some sort of reaction there? Well, we can see this imbalance here that the market maybe is going back to fix. So the question is are we going to break this high and keep going up? Or are we going to have a reaction in this level and start breaking down here? Okay. And then ultimately possibly break outside of this range? Well, I don't know. I wish I did know. I don't know. But I can read and react. So I'm going to pop an alert right in the middle of that golden zone, right in the middle of that area here. And yeah, I've got one over here, have I? I haven't. I'm going to put one in if it breaks the structure above here. Now, this is what we're talking about just understanding trading, all right? Because you hear me talking, I'm talking about Wyckoff, I'm talking about golden zones, I'm talking about market structure. They're all the same thing. They're all just understanding trading. Now, at the moment, most of us, where we are right now, is we're trying to understand one play, like one area of seeing market structure, understanding the bigger picture of what the market is doing, and understanding that whether we've got any confirmations that the market is doing something else. We have got zero confirmations that this market is going to be bearish right now on a daily time frame. Yeah, on a larger time frame. We've got no confirmations. Look, the market's going up. It's actually going up, going up, and going up. It's going up in this big yellow range. It's going up in this purple, this red kind of magenta range, and it's even going up in this white range at the moment. Yeah. So for all purposes, this market is all bullish, all bullish. Does that mean that I necessarily want to start buying from here? Well, not necessarily. It's not in the best place, but it is still telling me that, there is bullish momentum, and therefore, buyers are what's happening. All right. Buyers is what's happening. If the market starts to break outside of certain structure, first and foremost, breaking outside of this smaller Russian doll, which is this current impulse that it's in, I want to see it break outside of that smaller Russian doll. Then I want to see it break outside of this Russian doll. Okay. Then ultimately, I'd like to see it break outside of this pink Russian doll. Then I can start turning around and saying, well, boy, we are getting some confirmations that this market might be doing something else. Might be deciding wants to come all the way down here. Maybe deciding wants to come all the way down to this, bigger floor of Russian doll, that bigger blue, these two blue lines. Do you understand? This is understanding where you are from the bigger picture. And it's something that you have to do over and over and over and over again. You need to get so accustomed to understand that. Right now, I'm not fully confident, or I don't have a full confirmation that we are at the top of a ceiling, because there's this yellow range that's in play. Yeah, as well as this blue range. If I want to zoom all the way out so someone can see what that is and why that is. Okay, there's also this yellow angle, you see, of how the market was moving, taking into consideration data points. This data point and this data point has created those yellow range. All right, this angle down here, touching all of these data points here, has created this blue range. And I've just pulled the parallel line on the top of a high, the highest point here. Okay, now someone's saying, well, yeah, Jay, that looks a bit, I'm only using the data that's given to me. I'm not just like, that's the data that's been given to me. These data points is what's been given to me. Is this market going to go all the way up and touch this yellow point here, boom, and then start? I don't know, but I'm just at least analyzing the information that I have. I can't analyze information that I don't have. Yeah, unfortunately, I can't. Okay, so we will watch this NAS. And we will see, have a look. I'm going to scoot all the way back in, whether we're going to have a reaction to that golden zone that might give us a short little trade. All right. A reaction to that golden zone might give us a trade from here. That still doesn't break structure and start going and changing the direction, but it still might give us some sort of opportunity that the market's going to turn around. Have a look. I'm going to put a little line in like this. As this market is making some higher highs and higher lows and higher highs. For all purposes, it's just broken up outside of this structure here. And it's giving an indication of what it wants to do. Yeah, it gave an indication of what it wants to go and do on the larger time frame. It's closing up here. It wants to push up. Is this market going to come and close back down here and close back above? I don't know. Is this going to rally straight away into our golden zone and start having a reaction from here? And that might be the correction, only to go back up. I don't know. All right. I'm not going to turn around here and say I know. I don't know. Okay. But what I do know is I know how to look out for the things, the markers, the telltale signs, to give me some further information to make up my decisions. All right. So we've got all of our alerts in. Let me actually move this down a little bit. And I'm cool to move on from that one. All right. I'm cool to move on from that. Definitely seen an indication of this market on the 50-minute time frame. That's closures, bullish candles. It might just keep going into this level. Yeah. Or it might decide it wants to turn around, make a correction, continue. And that continuation might only still push into this golden level, this golden zone. Okay, but ultimately, overall, the market has been bullish. That's where the momentum is. All right, we have to understand. Let's go look at an actual forex pair instead of all of these indices. Has anybody got a particular forex pair they want to look at? Anybody got a particular forex pair that they want to look at? No? Yay?
Yeah, Grand Rising. No, GJ.
GJ, fantastic. Grand Rising, GJ. All right. Now, first and foremost, we open up GJ. It was on the 15-minute time frame. That doesn't mean anything to us. We need to understand what's going on in the bigger picture. We need to zoom out. We need to see that Russian go. Zoom all the way out to our daily, to our weekly, wherever we need to go. We need to zoom out. All right. And then if we want, we can go in here, click this cog, just click auto or reset, get everything reset. And I'm going to delete everything. I'm going to delete everything. Let's give this one a bigger picture. Let's give the whole screen. All right. Great. All right, so this is GJ. All right, for those of us who haven't traded GJ, never seen it before, I've zoomed all the way out, and now we're able to come up to some conclusions, all right? So I can draw some lines in here. I can say that the market was doing this at some point, okay? Touching these data points here, okay? We can also draw some lines in here, touching some data points so on the bottom here. I'm also going to do this. Have a look. This is just me connecting the dots, just hashing some things out. All right. This is obviously we're going back very, very far. All right. We've seen the data point here it broke. Look at this. How the market broke here, came all the way back down to touch that trend line and continue going. Coinky dink. I don't know. Maybe. All right. Now I'm going to move this out of the way a little bit, like so, and we're going to focus on what's been going on at least since the last few years. 2019, this market has been pushing up in this range like so. Let me make it a different color so we can distinguish it from the other bigger scribbles. And here's the top end of the range like so. All right, that's GJ. So we're at the top end of this bigger range, in my opinion. Okay, and we may be pushing towards some liquidity above these highs. Okay, who knows? Yeah. But I'm going to analyze what I can see. All right. So we can see that the market was doing this. At one point, it was pushing up very, very keenly, smashed into here. This could have been a point where it turned around, but it pushed down and kept pushing some more and pushed down and kept pushing some more and pushed down and kept pushing some more. This is the highest point so far. So I'm going to draw some lines in like this, touching that lowest point before that highest point over there. And one thing that I can see is what can I see over here? Potentially. Underneath these levels here. What's potentially down here?
Liquidity.
I think so. All of this market, that there was a battlefield here. There's a battlefield here. And the market couldn't break past this little level over here. Couldn't get down. Every time it came down, they got a smack. Yeah, there's some real demand here. Pushing. All right. Let's zoom in some more and see what's going on now. All right. Zoom in some more. Remember, this is the daily time frame. Every single one of those candles is a day in time. So coming from this blue line, we can see how this market pushed up. And to be fair, this is a higher point even than this. So if I have to draw some lines, I'm going to draw some lines like so. I'm going to make that pink. Yeah, the market is currently trading up within this trajectory. All right. And I want to know, I'm keen to find out whether or not that market is going to break down bearish and price going to break outside of that little range in there. I want to know. Yeah, at the moment it's not. It's making some higher highs, some equal to higher highs, some higher lows, some higher highs with candles, daily candles closing up above some previous structures. Drop down to our 4 hour, get some more information. All right, on a 4 hour, we can see this impulse here, higher highs, higher lows, higher highs, higher lows, higher highs, breaking structure. Then the market came all the way down here, wicked. Didn't wick below this level here. It looks like it did, but it didn't. When I put my little line there, didn't wick below it. All right, so we are still very, very bullish, making higher highs and higher lows. There is no lower lows happened yet. Okay, not yet. Okay, so for all purposes, this market is still bullish. Have a look here. If I go to this time frame here, which is my 1 hour, and I draw some lines in. The first lines I could draw in here is like so. Then you put a white line in here. Then we could even put a line like this, which was the last little high over here before this lowest point. And we've seen how the market has broken some minor structure bullishly. All right, I say minor structure because it's not a swing high, but it's broken like these levels in here. There were some little levels in here, broke there. Had a little correction, but continued going, that went sideways a little bit and then continued to push up in here. Hasn't quite broken above this. I'd say was more a swing level high. Why would I say that? Because look, if we was drawing the lines, it would look like this, right? I mean, is it just me that sees it like that? It would be like that. This would be a kind of major swing high. It hasn't broken that level at the moment. It's just dancing around it, and I'm keen to see whether it is going to break that level or not. If I was to draw some, let me get rid of those lines because it's messing our screen up. If I was to draw some lines in here, I'll be drawing from down here to something like this. Okay, let me try and shrink these down a little piece because I don't want them to. Let me just make it a different color. Let's make it a different color. Let's make it red. No, let's not make it red. Let's make it, there you go. Let's drop our time frame down, get more detail. Now you can see that sideways action I said. Started going sideways in this. A minute ago you couldn't see it, but now we can see it. Look, started to go sideways in here, and have a look at our strategy. Indicated, corrected, hasn't closed back above. This wick is not a closure. This wick actually is put a spanner in the works now, because now I need to see a closure above that wick. Has not closed back above this little consolidation. It indicated, it came back down in here, and then it has not closed back above. No continuation. This is the strategy over and over and over. And now we've seen it fall down here. It's actually sitting on 50% of the initial consolidation. And I don't know, the way it's moving right now, we've got to see, but it's looking like it wants to do this. In my opinion, I prefer it did that. It would make some sense to me if it did that. That it wants to, you know, that it's breaking down a little bit here. I'd like to see it break down here, to be fair. Because look, if I zoomed out, 1 hour, 4 hour, I would really like to see it break outside of this pink range because of this larger range. You know, I'd like to see it start breaking outside this pink range and deciding that it wants to turn over. Where's the other bottom of the yellow range? It's all the way down here. Yeah, I'd like to see that happen. I'd like to see the GBP lose some strength from a chart perspective. Japanese yen gain some strength and this market starts to fall to hell and us having a great bearish little run. But at the moment, I don't know. All right, but what I know on the smaller time frame is the market was definitely in the 15-minute, 10, 15-minute, 5-minute time frames. Let's go to 5-minute. It's just doing the hokey cokey in here. And we saw some indications, but we didn't see no real closure above this level here, telling us that the market wants to keep going up. And the market has actually since started going down and breaking some structure here. Look, it broke a little 15-minute low. All right. So I'm going to place an alert just here. Alerting me. And this is what I mean by you can write in here. You can write in here what that alert is about, you know. Alerting me of bearish, break of 50% of consolidation. You can write what you want to write. Write yourself a whole essay if you wanted to. You really should be able to. That's the alert's name. It should really be in here, to be fair. Yeah. The name could just be possible sell in GBP JPY. So when that comes up in your email or your text or your pop-up or whatever it may be, you don't have to start going and analyzing these charts. You can just, you know exactly what it's about straight away. All right. And you can do that, guys. You can take this as seriously as you want to be taken. If trading is a business, you're going to want to be taking these things very, very seriously and writing everything down and try and be neat and try and be orderly and be doing your journaling. And we're going to do a session on journaling and what we mean by journaling. We mean that every trade that you take, you need to document. All right. Sounds annoying, but it's like doing your taxes. Yeah. Every trade you take, you need to journal. You need to say why you took it. Because, for example, going back, and I don't want to be, keep picking on Jason, but he's made of tough skin, so he's good. All right. It's like, or even Darren. Because if you went back over your trades that you took, you would have realized that trade that Jason took first, trying to catch the falling knife that we went over, or that Darren sent me the picture of, saying that he was in the trade, or what do I think of it? You'd realize when you go back over it, maybe with some fresh eyes, maybe after you had a little glass of water, after the hysteria has left your body, you've realized, wait a minute, this isn't my plan. I shouldn't have taken this trade. You might realize that you're trading at the wrong time. You might be able, over a series of trades and documenting your trades, you might notice a pattern that the only time you make money is after 2:30. Or the only time you make money is in your Forex pits. Every time you trade the indice pair, you take it out. Or you might realize that your risk management's poor because you're supposed to be risking $100, but yet you've got losses for $160, $180, $200. Now, let me tell you something. You are not going to know that by trying to remember it in your head. You can't even remember how many trades you took this week, especially if you was in a frenzy. Yeah, and this is what is so important about you journaling your trades. Because you're going to realize, wait a minute, if you realize that you only make money at 2:30 after 2:30, you know what I'm going to advise? What do you think I'm going to advise? If you realize that you've taken 10 trades or 100 trades, and you always, 70% of the time or 80% of the time, you only make money after 2:30, what do you think Jay's going to advise for you? What's my advice going to be? What's my advice going to be?
Trade at 2:30.
Trade after 2:30, bro. For whatever reason, that's when your stars align. That's when you make some money. When the volume comes in the market and market's open, trade at 2:30. If you tell me to say to me, basically, I've noticed I've taken 100 trades. Out of those 100 trades, every time I take an indice trade, I lose. You know what I'm going to say to you? Stop trading indices, bro. I'm not going to turn around and say to you, well, we've got to work out a way you can decode it and hack it so that you can always make. No, forget about that.
Motion detected at your
Totally
front door.
forget about that. Think to yourself, okay, no problem, that's fine. Trade Forex pairs. Furthermore, let's get even more detailed than that. You're going to look at all your Forex pairs and you're going to see GJ, EJ, GU. You're going to see NZD, USD, AED, CAD. And you're going to work out, wait a minute.
Motion detected at your front
I make the most money in GU. Every time I take a GU trade, I've got like a 8 out of 10 success rate. Just trade GU, bro. Just trade GU. If that's what you're saying, that you've somehow decoded GU, you have some sort of affinity to it, and you know what's going on, just trade GU. Just trade after 2:30 GU. Can you see how important it is now when I'm talking to you about analyzing your data? Just from what I've said, you're thinking to yourself, yeah, this might be a good point. Maybe I do need to look over my history. Now let me explain something, how you can go about doing that, guys. You can open your MT5, your demo account, and you can go into your history. Yeah, you can go into your trade history, okay? And you can actually export it as an Excel list. And you can look through everything and you can learn something from your own stats. You've seen there where these, someone asked me about TradeZilla the other day, and I said, yeah, it's a fantastic resource if you have it. But let me tell you that you actually have a TradeZilla. You have most of the features of TradeZilla in your MT5. All right, you do have most of your features of a TradeZilla in your MT5. I can't see where my MT5 is to show you. It's not coming up for some reason. All right, let me open up account. Open up. Here's a account that I have. I'm just gonna go to a demo account. I'm gonna show my live story. All right. So, can you guys see my MT5? Should be able to.
Yeah.
You're gonna go to history. You're going to right click in here, and you're gonna have. Can you see something in here? It says reports. All right. So if you've actually got a trade, you're gonna go to reports. You're gonna click overview. Have a look at this. Your own TradeZilla. In here is going to be showing you how many trades you've taken, your gross profit, the amount you've paid in swap fees, yeah, the amount you've lost. It's going to show you, your equity curve that we talk about. Yeah, it's going to show you how many of those trades that were lot profit that were your bullish trades, your bearish trades, your longs to your shorts. It's going to show you what symbols you trade predominantly for free. Now, does it do everything that TradeZilla does? Probably not, because I'm guessing they added a little bit of sauce on it. But don't get twisted. This is the foundation of what they're delivering to you. So if you think that somehow you're going to get TradeZilla is going to just transform you into another trader, no, because you already have, let's just say 75, 80% of the features here. All right. You're also able to go to your history, right click, go to report, and look, export it as an actual, Excel sheet. If anybody who's an Excel whiz, so Excel, I love Excel. I'm always in there playing with formulas, going nuts. You can export it as an Excel, as a database showing everything. So you can look through it on Excel and say, okay, I can see that these are all my losses. These are all my wins. Yeah, I don't want anybody out here searching for some reasons outside of their own desire that's going to make them a better trader. Yes, you can go and pay for TradeZilla. I'm not saying don't, but do that when you know what you're doing, you're profitable, you can make some monies. Yeah, just don't be out here paying for 1,005 different things thinking that all of those things you pay for are going to make you a better trader. No, I've shown you. Here's your TradeZilla, giving you something. And let me tell you something, when you've got real data in here, this looks fantastic. Shows you your max drawdown, shows you how many trades you took per week. So when you're out here telling them, yeah, I think I took 5 trades for the week. No, this is going to show you took 15.
Sorry,
shows you how. Go on.
How do you export that? I missed that step.
No problem. You're going to go to your history on your history tab. You're going to go to whatever data or just right click in that place. It's going to say reports and it's going to go over here and you can it's going to have it as a HTML on so you can see it actually in your Explorer or open XML, an MS Office file. And when you click it, it will open up as in an Excel spreadsheet. Yeah, that you can actually be able to go and export it like that. Another thing here, guys, let me show you because a lot of people don't understand this. You see here, for example, this allows you to see all of the columns that you want to see, for example. So say, for example, if you go to trade here and you right click in here, these columns are showing you that you can manipulate these columns. So say, for example, you can see here that you've got profit, price, TP. Have you ever been in here and you've looked at your, you made £100 profit, $100 profit, but yet you're only up $87? That's because for whatever reason, there was fees, and you're able to go and see those fees or those columns to be able to put them on and see what they are, see your swap fees. You see, I've just added it. It says swap now. Maybe there's something in here that you don't need to see. All right. So when you go in the columns, maybe I don't want to see the ticket number. So I get rid of the ticket number. It's gone. Okay. These are the way, learn how to use your tool. I hear people all the time searching for some other golden bullet or they want the golden gun. They want the gold. Bro, you've got a gun. You don't need the golden gun. Yeah. You can still do damage with your gun. Yes, a golden gun will be nice. That fires big, heavy golden bullets. Yeah. But for now, this is what you have. So learn how to use it. And like I said, go back over your previous accounts, whatever it may be, and go into your history. Yeah. Click in this tab and see, right click. You can have, like I've just shown you, you can look at it here as a report, and you can have this report constantly open if you want. Whilst you're out here trading another pair, you can have it constantly open. All right. I've also shown you guys previously about how to save your templates of whatever tickles your fancy to save your templates. How do you do that? Well, you right click in here. All right. You will go to your properties and then you will make your chart however it is you want to see it. So say, for example, if you want to see it as a yellow on black chart, or you want to see it as a black and white chart, or you want to see it as colors on white chart, and you want to see a particular color of candle, whatever you want to do, you're going to make it like that. You're also going to go to here and show. You're going to make sure you have show bid price line on. You're also going to have show ask price line on. Yeah. This is showing you the difference between, your spread. Okay. I'd advise you to also have show trade levels on. It's not showing it at the moment. There's nothing to show. Okay. Now you can decide that you want to grid on or grid off, or you want to show period separators or not, or, what other ones in here? You can show trade history in here, but I don't like that. It just starts showing all the different dots all over your screen of previous trades you've taken. Yeah. This is what you're going to have on. Yeah. You're going to go to this one also, your common. And I would advise in your common that you click this scale fix on. Now, what this allows you to do, if I cancel, it allows you to drag the screen around, a bit similar to TradingView. When you don't have that on, it's a bit mad. It doesn't allow you to do that. All right. So let me go back in there one more time, because somebody's, thinking to themselves, I didn't know that. All right. This scale fix on. All right. My default setting is candles, but if I wanted it on something else, I could switch it to something else. All right. All right. And then once I've done that and I've clicked OK, then I want to go here. I want to go to my charts, go to my templates, and I want to save this template. I don't want to do this every single time I come to MT5. I ain't got time for that. I want to save that template. I've got it in here as JUnity. That's my template. When I hit that, everything goes the way I want it to go. I'm going to show you guys one other thing as well. It's in the code base. Here. Now, code base, if you don't know what this is, I'm showing you about your tool, guys. It's a slightly different session, but I'm showing you about your tool. Do not get confused if you MT5, I hate MT5, man, it's so rubbish. Like, why isn't it like TradingView? When I hear people talk like that, it's like, it's such a simplistic way of speaking. Like, TradingView's the godfather. Can't go on a hype that you like this other thing, blah, 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 blah. Yeah, maybe it's got, but you can do everything that you can do in a TradingView and indicators that you're going to go and pay for from your MetaTrader 5 for free. Look at all of these. These are all different indicators and different things that can help. Let me put it into, alphabetical order. Look, you've got MAs and this and that and all types of things in here. Every single look, there's loads of them. Now, you may have to make sure you're logged into your, I can't remember what it's called. You might have to log in first, which is easy. Just create an account. If you see you're trying to get in here and it asks you to log in, just log in, create an account, create a password, you'll be in. But look, you have access to all these. I'm only at D. Now, what does this mean to you? Well, it means that, for example, I'll show you one that I use, which is, can you see it here? This is called my candle timer. It's counting down, depending on what time frame I'm on. I'm on a 1 minute. Look, it's counting down. If it's on a 2 minute, you see, it's 2 minute countdown to when the candle closes. For me, this is the only really thing that I like to use on here, is that there's other people here, they've got some other stuff here that calculates their entry and boom, 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 and calculates their lot size. And I don't get too techie with it because there's loads. I'm only at D and E, all right? But I have this, and it's called, for anybody who wants to copy my settings, which will be in our documentation within the course, my exact settings, okay, is called candle timer, right here. And I just literally double click that, yeah? And then you can have some options of what, if you want to change, if you want to do it, like make some changes to it, okay? And you can edit it, maybe change where you want it to be and the size of the font or whatever it may be. But then once I've now got this on one chart, then that's the chart that I go in here and I save as a template. And then now every chart I open is going to be in this color pattern with a black background with this candle timer running, okay? That's how you get set up. And like I said to you, you learn how to use this tool. Also, up here, can you see all of your tools up here? Understand that you can right click these tools and you can customize them. Look, I can customize these tools. Do I want to see, triangles in my list? I can go that. Put triangles over here in my list. Look how triangle just appeared. I ain't got no use for a triangle, so let me do that and remove that. Don't want it in my list. Yeah? You can customize this information here, okay, and click save. You can also customize anything else that you see up here that you don't want there. Right click in the area, go to customize, and then you can get and all of these other things here that you might want to, indicators and step by step and save as a picture and register as a signal. If you don't want them cluttering up your screen, you can remove them. I've kept up the things up here that I want to see. I just want to see these things. That's it. And I have the ability to, oops. I'm trying to grab it. It's not allowing me to grab. I'm trying to grab it. Trying to grab it. Are you gonna let me grab it? Are you gonna let me grab you? Are you gonna let me grab? There you go. Yeah? And I can grab them, put them alongside each other and keep everything neat and funky. How did I just make all these charts for? Well, I had 4 of them up here and I just clicked this button here, which puts them all on one screen. So I'm just saying to you, learn how to use your tool. If this tool is going to drag you out of poverty, it's going to make you the money to buy you your Porsche, have a click around, give it the respect to try and find out what these things are. All right? Have a little click around here. What is this journal? This journal is documenting everything that happens in here. Your experts is your EAs, your code base. Some articles, I don't know, information coming from somewhere, who knows? Your alerts, all the alerts that I've got in the system. Yeah, I can clear these alerts, so I can edit these alerts. If I want, just double click into them or right click into them, double clicking over here, it's come up that I can edit these alerts, edit the sound, edit whatever I want to do in there. All right, your calendar, you know, your mailbox information coming from MT5, sending some information about certain things. All right, have a click at your exposure. When you're actually in a trade, it will show you your exposure. So if you're heavily exposed to USD and then there's some red folder news coming out, it's danger for you. Your exposures a lot. You're heavily exposed to United States dollar. If I had GU and EU and some other ones all over the place, it's showing me I'm heavily exposed. Okay, and then obviously your trade window showing you your actual trades. All right, but do have a click around. Don't be out here thinking to yourself that you can be as ignorant to not have a click around on your tool. And yes, you have a mobile app as well, but the mobile app is built off of the MT5 desktop. It's built off of that. It's a stripped down version with some little nuances. You may be nicer in UX, they call it, user experience. Yeah, but it's built off of this. So if you're not going to learn how to use this tool inside and out, then you are lacking. Yes, TradingView is nice, but TradingView is built off of the foundations of MT4 and MT5. They just put it in a new color and tightened it up a little bit. But everything that's here, you know, 80% is in your MT5. Yeah, it's in your MT5. Even more stuff's in your MT5 if you understand how to get more data, for example. Let's see if we can do that, show you how to do that. If I can remember, because I am on camera right now, so let's see if I'm going to make some mistakes. I might do, okay. For my remember how I recall, you're going to go to tools. You're going to go to options. Am I correct? Oh no, let's do this first and foremost. Your one-click trading, guys. If you want one-click trading up here, look, you must go to tools, options, and select one-click trading. Someone told me the other day, yeah, bro, I got a late entry because when I went to click my one click, I got the pop-up. So you're trying to get into your trade and execute very quickly to get that great entry. And then as you press there, you got a pop-up saying to you, have you read the disclaimer? Now, in a nutshell, this disclaimer, read it for yourself, but basically says, bro, sis, you do know that if the cat accidentally walks across your keyboard and clicks buy for 500 lots, it would immediately execute. We are not taking any liability for that. You will immediately execute and be in the trade without any stop loss for 500 lots if your cat walks across the screen. Do you understand that? And you say, yes, I understand that. Click OK. And now you're activated for one-click trading. If I hit this button right now, you hear, I am in the trade for 50 lots. And I haven't got a stop loss. Because to get my stop loss, I have to click on it and drag my stop loss to where it wants to go. Or I need to double click into my actual trade position and actually place my trade. The other way you enter a trade is by clicking new order, which is a lot more labored and considered way of doing things. Yeah. And therefore you can see your volume, your lot size, and you can put your stop loss exactly where you want it to stop loss. You can put your take profit exactly where you want to take profit. Yeah. And you want it to be fill or kill. Yeah. And you know, then you can place your trade. Make sure you're in the right pair. Make sure it's market execution. If you don't want market execution, you want a pending order, you're going to tell it that you want it to be a buy limit or a sell limit or a stop. This is a lot more labored way to go about placing your trade. Therefore, you know, you can't accidentally do it. Okay. But with your one click, you can accidentally lean and accidentally press buy. There's been times, guys, I've wanted to sell and for whatever reason, I've accidentally pressed buy. And then I've had to go, oh, shoot, and close my trade because I made a mistake. That one click is basically that. But to have access to it, you must go into your tools, must go into your options and select it. Now, where was we? We was talking about getting our historic more data. Let me see if I can remember if my brain's going to activate. My brain is going to activate because it's going to be, let me remember how you get more data, how you request more data. It's going to come to me in a split second. I'm just having a blonde moment, all right? It's going to come to me in a moment. Shall we request more data? It's going to come to me in a minute, guys. I'm just having a moment. It will come to me in a minute. All right. It will come to me in a minute of how we request more data. Hopefully it will come to me before the session ends. I'm just waiting for the one thing that's going to just jog my memory about how you do it. So basically, look, we get this data from the server. They provide you with a certain amount of data, but you can request more. And a decent broker will be able to supply you with more. All right. We see TradingView want you to pay for that privilege, but a decent broker will provide you with more. And you can download more from the internet. Because remember, it's historic. So the data that you want, that you're requesting, is available because it's historic. Where is it? I've gone mad. I'm missing something. It's not global variables. It's not task manager. Can't remember. It's going to come to me in a minute. Well, it will come to me in a minute, and I promise you I will tell you. All right? I've had a little blonde moment. All right? Apologies for any blonde people out there. All right? But yeah, so that's me showing you your MT5 tool, showing you the power of your MT5 tool, what it can do. It's very, very powerful. You can request additional data. You've got loads of indicators. There's going to be all types of stuff in there, all the type of, if you're an indicator fiend, they're all there. You can have your countdowns to your calculators. You can drag around your screen similar to this. People thought, I couldn't drag it around. You can. But let me tell you the most important thing is that's the place that kind of matters the most if you really want to go there, because that's where your prices are coming from. Your prices ain't coming from TradingView. And a lot of the time, you're going to notice that TradingView's prices are going to be slightly different to your price. Your actual bank is wherever your broker, whatever's attached to your MT5. So even when I'm looking here and I'm doing my analysis on TradingView, I am looking at my MT5 for the signal. I'm looking for my MT5 for that candle to close, because that's really where my money's at. This is TradingView's an interface, and this interface is just a window to all of these brokers. And all of these brokers have their own agenda and their own prices and their own slippage and their own issues and their own this and their own that. And some print candles better than other candles. Some print candles with all gaps in them. Some fill the gaps. They're all different. So really, though this is a great tool for me to use because it's on the internet and whatever it may be, another thing you're going to find is when news really starts rocking and rolling and there's some real news that happens, sometimes this can just dumb out on you. Sometimes this thing can just pause on you. Yeah, or be really behind the curve when I'm talking about some real volatile news comes up. And therefore, the only thing you can do is look at your MT5. That's your main reference. Let me show you one last thing that I was talking to Jason about the other day. Is when you're in here, guys, you want to make sure this down here, can you see bottom right hand corner? Yeah, this is your ping speed. You want to see where we are right now. Look, I'm all the way on access server 2.8, which is giving me 16.78 milliseconds. So I don't want that. I want the fastest one. I want the one that's telling me about what's going on the quickest. I don't want to wait 16.8 milliseconds when I can rate 13.9 milliseconds. Yeah? I want the fastest one. So you need to make sure that you're always on the fastest one here. Look, bottom right hand corner, you just click it. Make sure you're on that top one. And depending on what broker you are, they're going to vary. They can get down to, we've had some great brokers in the past, very, very low ping speed, giving us supposed as real as possible time information. I don't want stuff to happen in the world and then I know about it, 40 milliseconds later. That's not good to me. I thought the candle was going to close here and then something else happened. I want it in real time. You hear about people that trade algorithms, etc. They want to be as close as possible to the exchange. They're putting in big cable pipelines because that distance, the distance I am from the exchange, even though it's in probably, thousandths of a millisecond difference, it makes a huge difference if you're doing very rapid transactions via algorithms. It makes a huge difference. Yeah. So therefore, you want the same kind of things. You want information as quickly as possible. So I've shown you some different stuff here about your setup, guys. Maybe there's one thing you didn't know, and someone here has been able to go and add that to their, their repertoire. Okay. And I hope that I've helped. All right. Al, is there anything you could tell us about today? What's happening in the world? Al's still here. Al's not even here. He's left. He's left. All right. I know he's got work. Let's go here. Let's have a look at the economic calendar and see what's happening today. All right. Red folder news, hectic. Just like the other day, 1:30. Now, some for the newbies or the people that haven't seen it, you've seen how red folder news can affect things. So you're either going to take your money or protect your position beforehand if you're in a trade, or you're going to wait till after 1:30. And I'd probably say even wait until 2:30 when, you know, markets officially open. Yeah. And brokers are sit down at their desk, traders, and they're doing something before you start getting involved. All right. But if you're already involved and you're in good profits, by all means, take into consideration that volatility might be getting injected into the market at 1:30. We've seen it with CPI the other day. We saw it again the other day also. So just, you know, be aware of that. Any questions, guys, before we go? Slightly different session today, going through settings, etc. Sorry about my appearance. I did a workout this morning and I'm here, but it's what it is. Yeah, YouTube gotta love me for it. All right. Any questions? Any questiones? Good. If there's no questions, it's good. It means you had a good session. You know, you're satisfied. Your belly's full. All right. I want you to make sure that today you are taking the best trades. Yeah. What does that mean? That means you're waiting for confirmations on a decent time frame. 5-minute, 15-minute confirmations, indications, corrections, continuations. Making sure that you know where you are in the bigger picture. Understanding that, okay, right now, looking at this GJ, and potentially we're right at the top of that yellow range. Potentially, we're right at the top of that yellow range, or we're at the bottom of this pink range. So therefore, I need to read and react to what markets are going to do. If this market wants to, this pink range wants to break outside of this larger Russian doll, which is this yellow range, all right? Doesn't want to break outside of it and start going up here. I'd prefer it didn't, and it stuck to the program and stayed within the larger Russian doll, which is that larger yellow line. I'd prefer it did that. Okay, it would make more sense to me. However, the market can do whatever it wants to do. All right, so that's why I'm watching it to see what it's going to do on a smaller time frame, then hopefully on a bigger time frame if I'm able to get to a trade. And we've seen some consolidation. We've seen the market not want to break this swing high at the moment. Is the market going to start breaking down here? And doing this, yeah, and then maybe breaking here, you know, doing this, and then maybe doing this. Is it? Probably not going to happen all today, but this is the question I'm asking myself. Is the market going to say, you know what, no, Jay, we are going to break that swing high because we can see a huge attraction over here that we'd like to come in here and collect these monies, this imbalance over here. And is the market just mucking about right now? Gonna grab liquidity from up here, grab liquidity from down here, from down here, and then go up here and close this imbalance. Yeah, very possible before it decides to do this next week. Very, very possible. All right, guys, read and react. I hope you've learned something. I hope you're able to apply the knowledge. And I'm going to put on that 48 Laws of Power once again and let you guys have a listen to it. I think it's really powerful. It makes you consider as what type of person you are and what you do in situations and circumstances. I'm also going to, you know, wish the YouTubers to, you know, blessings. Thank you for being here. Please do like, share, subscribe, all of that good stuff. All right. Leave great comments below some of the videos. You could run joke on my vest and my appearance. I don't mind.